Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 9 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's a TGIF, folks. Let's make it a great one. Let's take a look at one of our 4 agreements. Surrender and let go of the past. Whatever life takes away from you, let it go. When you surrender and let go of the past, you allow yourself to be fully alive in the moment. Letting go of the past means that you can enjoy the dream that is happening right here, right now. Yesterday's gone. Tomorrow's not here. What are you doing right now, folks? That's the name of the game. Market-wise, let's take a look at it out here. We had the Dow Industrials up 111, NASDAQ up 31, S&P's up 13, gold contract down $26.80, trading at $1,270 an ounce. Silver down 56 cents at $21.33 an ounce. Platinum off 14 bucks at $1,371 an ounce. Copper up 2 pennies at $3.27 a pound. Light sweet crude off $1.10 at $101.91 a barrel. Bonds up 4 ticks. The 30 years up 4 ticks, folks, at 132.25. 10 years up 3 ticks at 126.03. King dollar down 47 ticks, trading at 80.47. The euro is up 30 at 135.55, and the yen is up 35, trading out at 98.51. My phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. Okay, here we go. Gotta love this market, folks. So, we go up 7 points. You do 616 million shares. We are right now at the 1700 level. Okay? So, the high that was generated out there on the 18th of September is 1729.44. We got volume up there. That's where we're going. It's going to go up and test at least. We did do more than a 0.618 retracement on the pullback. So that says, you know, the odds of breaking that and doing A to B equals C to D are lower. But no doubt we can do it, because I'm going to show you that we have some divergence here. So that's your S&P. Now, as we do this today, I'm going to go through the ETF structure simultaneously so you can get some real clarity here. The SPY. So what we did in the SPY today, SPY gets to 170.26. And I'm going to put it on the weekly so you can see what we have happening here. So Fridays are always cool because you can put it on a weekly, okay? So what do we have? What we did this week is that we got down to a low in the SPY to 164.53. For the whole week, we did 739 million shares. Now, this is pretty intense because this is what we did. When we were coming down, when we came down in June, folks, we had gone from 169 down to 155. Okay, so that's 140 S&P points. All right. Well, the week of the 21st, we did 1,050,000 shares. The high of that bar is 165.99. Okay, so remember that, just remember 1 billion. That's good enough, okay? Well, this week we did 739 million. What did we do? We went into that bar, rejected that price, and had lighter volume. That sets up, we're going to that high. Dow Industrials. We go over to the Dow Industrials. We take a look at the Dow Industrials. Dow Industrials up 111 bucks today. The differential now in the Dow goes like this. On the daily and on the weekly, we broke the August 28th swing lows with volume. However, what you have is that you were going into those June swing lows, and you didn't break them. Okay, so what does that set up? That sets up, guess what? We're going to go up and go for the top of the Dow also, which is 15,709, which is another 450 points. If we go to the diamonds, and you take a look at the diamonds, what we have, I'll put this on a weekly, because you can get a lot more clarity on the weekly here. So on the weekly, what we did is that we broke, first we talked about the Dow Industrials. We broke on the weekly on the diamonds, we broke the August swing low, and we did that with volume. what we did is that we did 47 million. That August swing low had 33 million. And we also came into the June swing low with 7 million more shares, 6 million more shares, which is 15%. Okay, so now what does that do? Okay, because we're going to really put this together. What that does is this. That's telling us that the Dow Industrials will be back downtown again. See, the S&P is not saying that. Dow Industrials is saying that. Okay, so there's the Dow. Now, let's go to the NASDAQ, NASDAQ Composite. So the Composite has been the king dog out here, big time too, folks, okay? We look at the Composite. Composite's at 37.91. The Composite is right next to its highs. The Composite's going to blow this high away. The Composite high is 38.19. We pulled this up. I'll put this on a weekly also. And what the Composite did... Okay. So the Composite gets to a price point of 36.50. That 36.50, bottom line, you know, didn't even get, let's see, 35.73. No, it didn't even get to its lowest swing point, you know. So the positive in the NASDAQ Composite is that, yeah, it's going to blow away that swing high. The negative is that it could blow it away this coming week and then close underneath it. Why? Because what you have also here is that you have a hanging man extraordinaire. Now you got to remember something. In council charting or candlestick charting, the signals that come about, some of them are stronger than others. In a hanging man instance, what happens is that it's the length of the body versus the actual body, the actual, you know, in this case, the hang, his head hanging. And this one here is long, big time, folks. So that's problematic for the NASDAQ Composite. Now, let's go look at the NDX 100, the three Qs. We take a look at the NDX 100. We did 24 million shares today. We're at 79.23, and that's right next to the high. You're only 50 cents off the high. That's on your daily. On the weekly, what we have is we got down to a price point out here of 76.25, and you're right next to it. This thing's going to blow it away. You know, you actually, the Qs, like, you can make the argument to really that are you pushing lows or pushing, well, you're actually pushing highs at volume. So to me, the Qs are going to basically blow it away. So thus far, what we have is this. You have the S&P that wants to get up there, that, you know, is saying, hey, it's going to go to the high. You have the Dow saying that, yeah, I can get to the high, but guess what? We're going to be down to the bottom again. Now let's go to the NASDAQ, the Russell 2000. Russell 2000, big expansion out here today. 42 million shares. That's a heck of expansion when you're going right into the highs too, folks. The high is 107.92. We're at 107.68. That high had 39 million shares. We did 42 million shares. The small caps are going to blow it away. Okay. On a weekly, what you have is that you're pushing that high with volume. So when you put that together, what do you have? You got to let the S&Ps get up to that high, and we'll see whether the volume contracts at those levels. I do expect it is going to contract. I'll finish the ABC structure on the way up. A to B equals C to D, which will get you somewhere up to the it doesn't have to get to the 1776. We'll get to 1749, somewhere around there. Bottom line is that what you have in each instance, specifically the S&P, every time we've come down, you've come down with volume. This baby is going to get down. The way this is set up here, this is pretty neat, folks. So if we pull this up and show you something on a 5-year basis, what you're going to see is this. At the end of 2007, 2008, when this thing really went downtown, and I'm not expecting 2007, 2008. I'm not relating it to that. What I am relating it to is that the signals about going downtown are getting quicker. You know, what we had done is that from November of 2012, we went straight up. November 2012 going all the way up to the first retracement was March, and then you had a small one up in April. We've had 3, and they're basically a huge warning signal. You stay right there, folks. So as soon as we come back, we're going to go through gold. And don't forget, folks, we have a gold. My gold report is going to be the 600th edition, the 22nd of October. We have a special going on right now. You get 60 editions for only $600 versus that's only $10 a week. We're going to be right back.